If you are a U.S. citizen working in Canada, there are very important tax obligations that you should be aware of. Otherwise, you could end up paying huge penalties to the taxman. This video will outline the tax responsibilities that you will have in Canada and the United States. Number 1. Filing a Canadian tax return. U.S. citizens are required to file a Canadian tax return if they worked in Canada. This return is due on April 30th of the following year. Number 2. Statement of employment earnings. Your employer will issue a T4 slip, which is a statement of Canadian employment earnings, similar to a W-2 in the U.S. This will be issued to you by February 28th of the following year. The T4 slip is used to prepare your Canadian tax return and to calculate Canadian taxes owing. Number 3. Residents and non-residents of Canada. As a U.S. citizen, you can either be a resident or a non-resident of Canada, both of which have differing tax obligations. If you are a resident of Canada, you are required to pay tax on your worldwide income. That's income from Canada, the U.S., and other countries. To be considered a resident of Canada, you have to have one of these 3 primary ties. Number 1, your home is in Canada. Number 2, your spouse is in Canada. Number 3, your dependents are in Canada. On the other hand, non-residents of Canada have it easy, as they are only liable for tax on employment income earned in Canada. Number 4, United States tax responsibilities. As a U.S. citizen or green card holder, you're liable for tax on your worldwide income. To avoid double taxation, however, you can claim a foreign tax credit for the Canadian taxes paid as per your Canadian tax return. Number 5. U.S. tax disclosure requirements. As a U.S. citizen or green card holder living in Canada, you're required to disclose a ton of information to the IRS. Some of these forms will apply to you. Form 5471, used to disclose ownership in any non-U.S. corporations. Form 8865, to disclose an interest in any partnership that an individual holds outside Canada. The FBAR, Foreign Bank and Financial Accounts. This has to be filed separately from your U.S. return if the value of your foreign bank and financial accounts outside the U.S. exceeds $10,000 US at any time in the year. Specified foreign financial assets. This form must be filed along with your U.S. tax return if you have more than $50,000 USD worth of foreign assets. As you can see, U.S. tax return and disclosure requirements are very complex, and there can be huge penalties for non-compliance. I highly advise that you consult a cross-border tax accountant to help you deal with these issues. Thank you for watching. Please remember to like, comment, and subscribe. Also follow us on Facebook and Twitter. Thanks again, and see you next time.